Welcome everyone to the Kendall Report. Well, it is Wednesday night. I'm just looking at a couple of the comments here, and before we get into it, make sure you subscribe and like these videos. But I'm just seeing some things. There's a lot of new buys coming into the database. I'm assuming that some of you have Wavetech, and one of the hardest things, and I talked about this in the live room today, one of the hardest things to do is to do the buy signals. And people are going, well, you can't, how could you get bullish in a bear market? Well, that's a relative term. And yes, we are in still downtrend in the weekly models for sure, but the daily short term is what we're really talking about here. And so far, the last couple sessions, including, remember something, and I'll mention it again here in a bit, but we are looking at that the markets, we do have a weekly cycle low coming in this week, and we're coming into the final few days of trading for May. So everything's coming into an end. We got a long weekend. People are going to have to probably shore up a little bit before the weekend, but we have until Tuesday till we finish the month here. But just know that the signals that are coming out right now are short-term in nature. They typically have 30 to 50. I'll go into that in more detail here in just a minute, but 30 to 50-day holding period. So we're talking about a month here, maybe 3 to 4 weeks, and there's probably going to be some pretty good things. We also, in yesterday's live room, and today actually, in today's live room, we actually did an ETF hack on KRE ETF, which is the regional bank spider, and we tore through that and found some pretty interesting stocks for short-term trades only. So like I said, I'm still expecting to see anywhere from 8 to, we'll call it 8 to 12, it could extend out to 20 sessions, and these are trading sessions, which should take us into June. And so things are still looking very interesting. So yesterday we saw the S&P come up 0.6, Nasdaq up 1.5, Russell up 2%. Been talking about the Russel. I'm going through all the details here in a few minutes, but I've been talking about this, and it is going to be there. Who's holding it over the weekend? Probably me on anything I own. That doesn't matter. I mean, it's just a weekend. So anyway, but let's go and talk about a couple things here. And I thought it was interesting. I've been talking to you folks about the market, from a bond market actually seeing a rally and interest rates coming down, and that happened again today. But wait a minute, didn't the Fed say they were going to raise rates the next 2-3 meetings by 50 basis points? And the rates go down, 10-year drops? Let me explain what I want to go into a little bit of a rant on the Fed. And it's interesting. It just came to me. I'm writing down, I have notes here that I go through when I'm doing these streams. And something just kind of flashed right out at me. And I realized something. Is everything, and I've been talking about the dog wagging the tail with all the QE stuff, the markets were waiting for the Fed to do something and lead them. Otherwise, the tail was wagging the dog. Now the dog, the market, is telling the Fed what to do, and this is how it should work. And I've talked about this numerous times off and on over the last couple months at least, is that the Fed tends to follow the market, not lead the market, especially in times of QT, quantitative tightening, versus what we've been seeing. Just so you know that the punch bowl is going away, we actually, I forget the exact number. I thought I wrote it down. I'm looking here. I didn't, but I think it was like, money's coming out of M2 like crazy. It's plummeting right now. So you can see that the punch bowl is coming away. But like I said, bonds are rallying. So why would that be if the Fed is telling us they're going to raise rates? So here's the deal. They are so far behind, not a little bit behind, everything that the market was telling them that they should be thinking, coming in, watching the massive acceleration of inflation, the 10-year going from 1.25 to 3.16. And meanwhile, the Fed's not raising rates. They're still doing quantitative easing. You folks know everything that's going on. So all of a sudden, now the Fed is actually talking about what the market has already done. So they're talking about going to a neutral rate. Well, the market already went to a neutral rate. Now we're starting to back off a little bit. So the Fed is playing catch up. But the real story here is that you're going to have to watch the markets. I'm going to talk to you a little bit where I think the 10-year could go, and it's going to be lower, not higher from this point. There's going to be a continuing backfilling on the interest rates. There's going to be some other things, and it's not going to be for any reason that you think other than folks are just shifting money around right now, and that's pretty much what's going on. The other thing that I thought was interesting, if you listen and read those Fed minutes, they basically are saying they're going to get to a restrictive mode. Well, markets have done that by just moving the yields where they did. I think there will be surges higher in yields down the road, but the Fed's just really behind the curve. I'm not telling you folks anything you didn't already know. So, I mean, you could go through the comments on my videos, and there are people saying, well, the Fed's going to come out today and it's going to crush the market. Market's going to collapse. No, it's not. Matter of fact, like I said, I'll show you here in a minute, we are getting a lot of new buying coming in. And how many of these trades are going to work? Probably 60% of them are going to be good. Typically, we'll get between 50 and 70% of these new trades coming out will actually be profitable when they exit the trade. So we're definitely finally seeing some traction here. We're still below some of the key numbers, but we're still seeing this traction come in. And it will be interesting. I think the most, from my viewpoint, what we see on Friday night's run when the intermediates come in, if we start to see that uptick, it dropped down to 9%. We virtually own nothing on the intermediate level, and it makes total sense. And buying low and selling high, you can't. You have to look for these patterns to set up. And we went through some really good patterns. I wish I had like 3 hours I could go through everything. It'd be easier if you just join, get the indicators, come to the live room. There's a lot of cool stuff that we do in there. Today was especially, I went into a lot of things about portfolio management and other types of criteria you have to be more of a manager than a speculator. Now, I always talk about indexes and specific markets here. I don't really go into being a portfolio manager, but that's what I do. That's what I really do. That's what our software does, Portfolio Expert and Wavetech. And you get those, if you want to find out more, kendallreport.com/Wavetech, kendallreport.com/expert, no E, just an X, and then PERT after that. And there's a little video and some information there. But it's about being a portfolio manager right now. So we've been 40 to 60% in cash. There's probably some of my institutional accounts here from the standpoint of watching these videos. Maybe they'll comment on here, but I've already talked to quite a few and what they're seeing. And the short-term trades that are coming on right now could be a predecessor to something bigger. So I'm not getting super bullish here. I'm not talking about all-time new highs, but I'm seeing something else out there. I used to work at a company called Prudential-based Securities, and we had an economist guy named Ed Yardeni. He's still out there, Yardeni Research. Ed, I'm sorry, I'm not trashing you on purpose, but you were always bad. Even when we were back in Beige in the 80s, we could always fade you. And once again, he was saying no recession, no recession. Well, guess what? Today, I just happened to catch a little clip, and he's telling us now he's raising his inflation and there's more risk and all that. That's what you're hearing everywhere. All of a sudden, all the analysts that said, no, nothing's going to happen, are all now starting to lean that way. So just the way they're swaying right now is telling you probably should be doing the opposite. I'm not telling you to go buy all kinds of stuff, but I'm just looking at what our database is buying and what's starting to rotate in, and I'll probably talk about that. Hopefully I get a chance to talk about that tomorrow night. So just one real quick thing. I know it's in the middle of the video here, but if you're watching this, there's not going to be a video on Monday night. There will be a video on Tuesday night. So typically I have a video to start the week. Unfortunately, I'm not going this week. And even more bad news, the entire next week, the week of June 5th, I'm going to be gone the whole week. But I am going to try to do probably no video on screen video, but I am going to attempt to do a couple updates. So I'll let you know how that happens. But next couple of weeks again are going to be really crazy. And so I just putting that out there midstream. But just know that just about everything you're starting to see. I like to just watch a few minutes a day. I think there's a halftime report with I forget Scott Wapner, I think runs that. That's just a great way to get sentiment. These people they have on there, probably John Najarian's the only guy that's worth maybe listening to, only because he's an option trader. But everybody else, if they actually invest like they talk, I think there's a guy named Weiss. He's pretty accurate in what he's thinking. But most of these people, if they invest like they talk, they're not a chance that they're making any money and ever make any money, I don't think. But it's just a whole concept of all the earnings and all the things that they're talking about. You're always looking in a rearview mirror. So what our models are doing right now is they're just looking at short term. We'll see if we get any rotation on Friday night for next week. Maybe we'll get some positive rotation on the intermediates, but we got a long ways to go. So don't go off and you trolls start saying, oh, Kendall's all bullish. I am bullish for the short term. We did see a bit of a rally overnight. I'll talk about that in a minute. Already been rejected again right around that 4,000 level. But But the whole point of what I'm telling you is we're seeing rotation. I've been telling you folks if we go back 3-4 weeks ago, I said if we don't get the rotation, there's no way I'm going to be able to actually start talking about the bottom. Well, we saw PPMs turn up. We have a cycle low due this week. We got traction in the database. I will not ignore that. This is why you folks come to actually see and watch these videos, for me to report what's going on. You don't have to agree with me, that's fine. But I'm just telling you, these are the things that guide me. They guide billions of dollars in the marketplace. This is not a joke. I'm not a YouTube guy out there. I am, but I mean, I'm telling you exactly what's happening. What our institutional clients and those of you that are retail have taken on with this process and decided to be more of a portfolio manager than a speculator. So let's go ahead and take a look at the database. I think that's everything. Let me check my notes out here. Looks like I covered everything. I trashed Ed Yardini. Listen, Ed Yardini is a very smart guy. I respect his work. It's just, he's a typical economist. I mean, these guys, if he had to trade for a living, he would have been out of the business a long, long time ago. All right, folks, let's get into the database. Okay, so here we go. 35.91% bullish. You folks know 42% is a magic number, but we immediately, I talked about 22, 28. We went to 29 yesterday. We're now 35.91, 3,137 new buy signals, 80 sell signals. Talk about, if you look on this line here, I'll put a cursor by it, is that it says bullish and bullish. There was the ratio is huge, 2,699 on our model 1.2, 112 to 1, and then on the other one we got 438 to 56, a 7.82 bullish ratio. So there's a lot more buying coming in, and now if we look down at the last 2 weeks, we're now into around 12,400 versus a little bit about, I'm just rounding numbers here, around 2,100 sell signals. So everything's been biased for the last 2 weeks. We have seen a little bit of rotation. That's exactly what I've been expecting to see. This is actually a positive thing for the short term, and I would just be cautious. There's still going to be plenty of volatility here. We've actually seen volatility kind of come in a little bit. But and just real quick, I'm just interacting a little bit more than I normally do tonight. I see Weiss is a perma bear, and he's been right, but now he's still there. So that's another reason to watch that stuff. But it's just interesting to get a feel from these folks. But what I'll be looking at for the database coming into Friday, I'll talk about it on Tuesday night. Maybe I'll put some stuff out on Twitter. So if you follow me on Twitter, I'm Twitter/portfolio expert. There's no E in expert, and you can follow me there. And I'll try to put some things out over the weekend since I won't be around on Monday night. So let's go ahead and take a look at the S&P. I think there's some interesting things going on here. So first thing I brought up here is actually this is the 5-minute chart on the left-hand side of the screen. On the right-hand side of the screen is a 1 minute. I brought this up just because you can see we got a pattern that we talk about a lot in the live room here, and it's a rounded top. I call it a veil. So we got a perfect rounded top here, right at this 39.97 level, and we're back to 75. I think we're probably potentially going to go back to, and I'll show you the market grid here on the typical trade station, but we're likely to go back to probably an R1. We could actually see an R2, so we could see a little bit more of a retracement than we've seen over the last couple of days, although last night was pretty volatile. So let me go to TradeStation here. Let's bring up the so far tonight, 39.93.50, R1 39.96, so let's call it an R1 hit. S1 39.57, so far 67 low. So R1, S1, I think we could actually see maybe a bit of selling here. If we get through this 57 level, then look for 39.36, which would be an S2. And this will be the key for tomorrow. So let me try to set up tomorrow. If we hold 57, probably into the first 3 hours, if we don't get below 57 in the first 3 hours, then look for a re-challenge of the highs at 96 and a possibility of seeing 40.17. And there's a number here that I want to talk to you about. Is the pattern suggests that we're going to, I mentioned this in last night's video, the pattern suggests that we're going to go up to the 21 period moving average. Right now that average is at 40.39. It is declining at about 10 handles per day. And the PPM3, I told you this as well, is starting to turn up. So hang on, I say I got the wrong screen. You're looking at my studio screen. That's handy. 1 second here. We'll just stay here. Not sure what happened there. So so what I'm looking at here is a couple of things. Is that the volatility, you'll see how the market grid is collapsing in. And that's volatility collapsing. And once again, you could have bought VIX 31, 33. You could have went long again there. That's been a great number. Under 20 has been a sell, but we should move up toward this 21 period moving average, and that should set us up for a move around 40.20 to 40.40. And I'm just putting this out here, especially as we come in on Tuesday of next week. I'll talk about it some more tomorrow night. But that number, if we print up there, we could get a pretty hard rejection from that level. We're still at a minus 0.24 on PPM2. So look for a pretty hard rejection from those levels. But we are starting to see an evolution. We went through I thought it was interesting. Folks seem to enjoy it today. But we went through basically the steps of what happens in the PPMs and how they evolve and how they can go from a simple pattern, what we're at right now, how they could evolve into a more significant pattern on the upside. So let me see if this one screen is working right. It is not. So if I was talking and I was on that screen before, I apologize. So I'll just come up this way. But this narrowing of the market grid is significant, and it's basically coiling. So we had this massive, I've talked about this, I call them bubble bottoms. We got that bubble where it's a much more confined than like if you ever looked at Bollinger Bands are standard deviation lines. So they'll blow up sometimes to get these really big, where this is a pure volatility environment that's on the market grid. So you'll see an expansion, but it's a relative expansion. You don't get this weird big bubble that you get like in Bollinger Bands. So you get a little tighter, but when you see them, they mean something. I mean, there is an extreme happening. And you can look across the screen here. Let me go full screen. You can look across here. You can see my cursor off on the left. There was a little mini bubble here. There was another bubble back in early January after the initial decline. We bounced out, and then we keep getting these little bubble patterns. And now we had a bit of one right here in early May, and we ran up, and now we've got another one. So the key will be, in my opinion, is if we get above this 21, and I mentioned this last night, that we're probably heading toward the 40-period moving average, but it is declining, and that means that there's going to be a point on the chart that it will meet somewhere between, we'll just round it off, say 41.50, 41.20. So we could have the better part of 140, 150 point rally basis the S&P from here. And let's face it, we're living in a world right now that we could have a 100-point S&P day. So that's nothing. And a lot of times I'll say this, it'll happen the next day. But what I'm looking at here from the standpoint of how the PPMs are set up, everything's starting to evolve. So you get the PPM 1 to kick in, and 2, and 3 is the last one, and then that's how you get a confirmed trend. A lot of times you won't get the PPM 3 to turn in, and then you just kind of get a roll up, and you get basically what you've seen on this screen here. If we go back into the little February bounce, never got a confirmation, never got PPM 3 to kick in. So those are the things to look at. I actually went through a lot of the basic thought and logic that goes into our modeling. And this is stuff that we developed way back in the 80s when we first writing the script. So it's fun to be able to bring this out and then also have you folks have these indicators so you can use them in real time on anything, not just on the stuff we look at. But these patterns they're setting up here, I think, are significant enough to point it out. And I'm seeing the database kick in. Like I said, we're up to 36% bullish. I wouldn't be surprised if we're just stable on Thursday that we'll be able to get there. And I didn't mention it earlier. I'm still kind of stuck in this index environment here on the S&P. But we do have claims coming out. I don't think anyone cares. We've got claims and continuing claims coming out, so I really don't see any really big things going on there. Just looking for my notes here. Yeah, it's claims are expected to be 210, continuing claims 3.3. That keeps going down. We also have, and I sorry I didn't mention this earlier, but we also have, since we're still on the indexes, we have a second revision of GDP coming out, expected to downtick, or actually uptick. It was negative 1.4. It's supposed to be at a negative 1.3. And the deflator, again, is something to watch, which is the indication of inflation, which is going to be expected to be 8.0. And then we have new pending home sales. I don't know if you folks remember, but we got a nasty number on home sales where we got the pending home, the actual sales were down 16%. And I think we're going to see a bit more of an implosion. There's a couple areas like where I'm at right now, Arizona, some areas in Texas and Florida that are really hot because a lot of people are going there. If you're in any of these other areas, which is a lot of country outside of that, it is collapsing. There's just the amount of activity is just going down. So on a national level, we're likely to see these numbers continue, and those are the readings we're getting. You start to break down regionally, you'll see slightly different elements from that standpoint. So sorry to insert that there. I got a little bit in a rant earlier on some of the Fed stuff and all that. But these patterns are set up. I guess what I'm trying to get to is we've got a number of things happening. The database is getting traction. We're seeing PPM starting to turn up, and we're seeing volatility start to collapse, which is typical before if the market's going to make a move up, you get a little squeeze. It's almost like a squeeze play. You get a little squeeze and then it pop up. But I think we're going to have issues somewhere around the 21, 20, 40, 20, 40, 40. And I would use this index here as the S&P index as also trigger points to look at where we are in resistance points on the Nasdaq as well. Now I'm going to go through the rest of the video tonight fairly quick, but I wanted to unpack a lot of elements that is going on right here. And the other element that's out there, and I mentioned Let me bring that up here real quick. Hopefully I still have it on there. I do. There is a cycle low due this week. Now that cycle doesn't mean anything more than we might just run back to the 10-week moving average. That's at 42.35. And that number is also declining. Let me just see what that is. Yeah, that number is declining at about 50, almost 50 handles. We'll call it 40. So that's going to put us right away right into that 41 handle next week. And at that continued rate the week after that, we could be down at 41.20. So I think we'll hit some resistance. I think a lot of these trades that we're seeing will be short-lived, but what we won't know until we see more of the configuration, what's going on. And like I said, I'll do my best to maybe do at least 1 or 2 updates while I'm out of town. All right, so the next market we'll just stay with it since we're there. We got a weekly Nasdaq. PPMs are still very negative, so all we're likely to do is just get a rebound back into these weekly averages, which is a fair ways away. Right now, that's at 13,287, dropping about 200 handles per week. So in a couple of weeks, you can see we'll be 500 lower from where we are right now. And that's going to be a resistance point. And once again, depending on what the PPMs are doing, what's happening with the database, all this stuff is going to work hand in hand. So to come out right now and for me to tell you, oh, there's major low you want to buy, that's not what I'm telling you. What I'm telling you is there is a potential for an intermediate low. There's still some numbers I will start focusing in when we get into June. In the second and third week of June, we'll get into actually discussing the quarterly, some of the triggers there, and some other things I want to talk about, but I'm reserving that. I talk to a lot of folks, and sometimes there's nothing more important than where we are right now. You can talk for years what's going to happen 3 years, or do a Kathy Wood, right? And this is going to happen in 3 to 5 years. Who the hell knows? I've never figured that out. What I do understand is I can understand the evolving trends that happen in short-term, intermediate, and on the monthly and the quarterly, so we can get a feel for that. But you got to read the tea leaves as they come to you. You get too far ahead of yourself, your accuracy goes way down the tube. And I've made some really good long-term calls, and I do believe that we're going to get a trigger, and I expect to see much more downside in this market. That won't be a straight line. It will see a bounce here. Let's take a look at the daily Nasdaq real quick. Same old pattern here. PPMs have stalled a little bit. We're at 0.04 on PPM 1, PPM 2, 0.42. So there's nothing, like I said, please don't misinterpret that I'm this raving bull here. I'm just saying that right now we're into, depending on how you read, especially on the S&P, you read the configuration. We're a couple days into this cycle. We should get 3 to 5 days up, couple day pullback. I set this up for you last night. Couple day pullback, and then possibility of another 5-session run. That puts us 12, 13 days down the road. And those are market days. So that's the better part of 3 weeks. And that looks pretty solid. The key numbers are going to be pretty obvious here, and I'll set that up as we come into the end of the week. Expect on tomorrow night's video, especially since I won't be around pre-markets on Monday. So here we are at the Russel, and I've been talking about this as well. Sorry, wrong Wrong button. Bear with me 1 second here. So here's the Russell. Look at the PPMs here. And I've been screaming about this for the last couple of weeks. And I am going to set up a pattern here. I'm going to draw something in. And just so you can see what's happening here. So this is a pattern that I go on about ad nauseum. And here we go. And I've talked about this before. We get a 1-2 pattern, and typically you'll get a projection to the upside. And this is probably at least coming up to this 40-period moving average. And I think there's a potential on the Russell to go further and maybe come up to the 200-day moving average as well. But look at these PPMs down here, absolutely screaming. What we need to happen though is to get above the 21-period moving average. 20, I think I have it at the right point. Let me draw this in. But here's what we need. We need these PPM 3 to kick in. We need everything to kind of kick in here and then get that going. What's interesting is the 200-day is trying to give a buy signal. So that's just telling us that if we get a little more acceleration, we get some movement to the upside, all of a sudden the target will be 2130 roughly, which is the 200-day. So this pattern, and I've talked about this may be the pattern that, and I don't know how many times I've said it, but I'll say it again, that this Russell pattern may be the pattern that's going to lead the markets off the lows. Does it get more bullish from here? Anything's possible. I'm not certainly ruling out anything. I don't think we're going directly to all-time new highs or big new bull market starting, but I do think we're going to rally into those weekly resistance points, which will be 10, 21-week moving averages, and that's likely to happen as we come into June. I think if you had everybody kind of finally starting to push over, including the Fed, everybody's just going, okay, markets are getting, now we see it. Now we're going to go to recession. Now we're going to go lower. Now we're going to do all that stuff. That's the perfect time to get a counter market rally here. And what's happening with our database, I'm just kind of going on tonight about a lot of these elements. What's happening with the database here is that's exactly what happened, is the database is picking up all kinds of new patterns. This is non-emotional based stuff, right? It sees these patterns. It sees what we're looking here on an individual stock level. We're running this on 16,000 plus symbols and looking for these patterns to emerge. And more of them will end up being profitable, as I said earlier, than losing. We're not going to, probably somewhere between 60+% of these orders are coming out are going to end up making money. Some will make a ton, some will make a little bit, some are going to lose. That's just the way it goes. But the point is that this pattern that's set up here, we're looking at this pattern across 16,200 symbols. And the models just ran just a couple hours ago, and that's what we're looking for. So that's why this data is so important to me. The core of everything that I do with these PPMs, the patterns, all these tools that I put out to you folks, plus there's a whole quantitative background between how these rules interact with each other at different times. So the point is that this is what we're looking at. So I'm not just coming up and turning bullish. As you folks know, I always say I'm data driven, but this is what's driving it when we see these type of patterns. All right, so here we go, 10-year. So wait a minute. So the Fed, we peaked out on the 9th of May, The Fed is way behind. They're talking about, I don't even, we're going to taper. This is what we're going to do it. Now they start everything and interest rates go down. And I think what's happening here is we probably got just a touch more. There's a potential if we get below, we traded right down to the level that I talked about the other day, just below that 2.75. 268, 262 is in the numbers, but there's actually Fibonacci targets for 266 and 2.53. So who thought that we could see a 10-year note drop down to that level? So I know Abbey Road, you put a super tweet out earlier asking a question. I don't. Yeah. So yeah, I would just say I think it's going to be any kind of increase in any of this stuff in the yield curve is going to be pretty moderate. I wasn't sure what your question was. So if you look here, so when rates are declining, this is what's happening. Rates are declining, the yield curve is steepening. And I showed you this last night. Let me move this out of the way. This is the 13-week versus the 5-year. It's just screaming, coming back big time. And the same thing with the 530, or this is a 1030, and the same thing with the 530. So these are big moves that are happening in the curve, and so that's just telling you that. And we may, just to kind of summarize this, we may get somewhat of a rebound. Let me go back to the chart here on the 10-year. There's some support around these levels. That's 275, 268. The upside is very, very limited as well. So you have to kind of relate the movements to the 20-year. Next market is crude oil. This is a broken record, but I'll just go through it very quickly. This is the daily. We're seeing this narrowing. We did have a cycle come in just the other day. I think there could be a little bit of downside here, but not a lot. 104 is probably the floor. We'll go over to the weekly just to get a feel for where the bigger trends are. The 10-period moving average, 104.16. That's most likely your downside. We'll look at the market grid here, looking at 115.80, highs 111. We've actually, R1 is 112.89. So that's probably the point where we'll stall. We basically have printed that number almost. And then R1, 112, S1, I'm sorry, 107, S2, 104. So maybe an S2 move, but we're going to continue to climb this line, especially with the PPM 1 and PPM 2 at a very robust levels, but primarily 1 is at a plus 1.03. So right now there's only about a 10% probability for the market to close below that. We did see some one close in this entire period. If we go all the way back, we got back above this, going back to January, we've been above that 10-week moving average except for one close on April 8th, and then we got a reversal, and we've been hovering right on that 10 ever since. So what you look for is if the PPM starts to break down, we could see a rollover and things start to move a little further south. But 104 is going to be the bottom end for the moment. So gold continues. We'll just go weekly, then we'll hit Bitcoin and we'll be done. I went for a while there on the indexes and primarily on the S&P on the front end of this video tonight. But we're looking here at gold is attempting to get back above the 40 period moving average, it's 1853 is the last price, 1853.80, 1849.20. There's still a lot of downward pressure here, so we're very restricted. Probabilities of getting above 1890 are very low, but we could see if we can stay above this level on Friday coming into close, then we've got a shot at maybe continuing to move up in here. But I think there's still going to be just a lot of consolidation. PPMs are way negative here, so there's going to be tons of resistance. Around 1890 is going to be the ceiling for right now, no matter what happens. So final market we'll look at is Bitcoin. Weekly Bitcoin, absolutely flat. I talked about this on a closing basis. We closed on the 15th at 32.76. We closed 31.36 last week. And so right now we're trading 29.719. So we're a little bit under there, but it's basically this flat pattern. And we still have very negative PPMs here, minus 2.87, 2.06. So there's still a lot of downward pressure. And I still think there's probably a 40+% chance of a move down to 22,000, which would be the 200-week moving average. Quick look at the short term since, and I think this market's been completely stable and almost protected from the standpoint of what happened and all the stable coins and all that craziness that went on. That has been, I think, a significant impact on Bitcoin. I think a lot of this has become, I think, a safe haven. All these other coins were put out there as it was going to be safe and stable. Here's another one of those irony moments, right? And so it's I see this stuff and the whole concept all of a sudden end up to be at best a fraud. And so the only thing that, if you're in the crypto world, maybe Ether and Bitcoin are the only places you can really kind of go to, maybe with some confidence. Even though we're down a little bit, we're still seeing stability for the most part. We're not seeing a collapse, but I do believe that, like I said, there's some vulnerability here for a pretty decent move down to around 22, maybe mid 22s there. Okay, folks, this is going to do it for tonight. There'll be one more video tomorrow night. Then once again, just a reminder, be Tuesday night. Even a better reason to get these indicators so you have them on there and you can watch the videos and learn how to use these things. They're very powerful. We've had some great feedback and people using stuff, not just in the live room. I know a lot of folks, even in time zones or other reasons, can't be in the live room, but you can actually go back, and once you get signed up, you can go back and watch anything we do when it's convenient for you. So there is an archive of all the videos, so you can do that. Anyway, folks, thanks again. We'll see you tomorrow night. Those of you in the live room, we'll see you tomorrow at 1 p.m. Looking forward to it. Maybe we'll continue some of the stuff that we started today with the ETF hack and some other things. So have a great evening. We'll see you tomorrow night here on YouTube and in the live room at 1 o'clock. Thanks a lot, everyone. Yeah, I saw somebody say I look like their grandpa. Hopefully that's a compliment. I'll take it as one. All right, folks, have a great night. See you in the live room tomorrow. Remember to subscribe and like these videos. And don't forget to go to this link, kendallreport.com/indicators. Find out how you can get involved. Support the channel and make some money. Thanks a lot, everyone. Talk to you tomorrow.